Iowa State Extension livestock economist Lee Schulz is our hog market analyst this week. 2016 was a good year for U.S. pork exports. It was the second best on record behind 2012. About 21% of American pork production was exported in 2016. Mexico was the top buyer, accounting for nearly 31% of the total. An incredible close to the year helped. Shipments there in November and December were Mexico's highest 2 months on record, with data back to January 1989. We talked with Lee Wednesday morning and began by asking why Mexico has been such a strong player for U.S. pork shipments.
Well, I think you look at Mexico, this has been a very positive development. If you look at the first 5 of the 7 months, they were lower. So they did really gain a lot of momentum as we got into the latter part of the year. Really driving that has been the demand for hams. If you look at a specific product mix, some of that has been due to, I think, a little bit of back off from the imports of hams from China, from the U.S. mix, so that similar product mix has helped that flow a little bit, but also I think really pointing to the strong demand from Mexico. We know that there are conversations about them growing their domestic herd, so I think given their supply situation, that has really benefited our exports to Mexico.
If you look at the overall scenario for U.S. pork exports, where do you think the ceiling is?
I think the ceiling, I think that is yet to be really defined, and I think we will highly debate that over the coming years. As we've initially kind of seen the headwind from the exchange rate and the strength of the U.S. dollar. Now, the talks of free trade agreements and potentially renegotiating some of those agreements. I think that has given us maybe a bit of cautious optimism. But if you look really long run, I think, some of the forecasts I've seen are for growth of upwards of maybe 15% in the next 5 years and maybe upwards of 25% from a volume basis in the next 10 years. Now, a lot of that's driven by our increased supply. I think our calculated growth here in the U.S. situation. But I think also we really need to look at the percent of our production that is exported, really key on growing our market share on those export markets.
If you look at 2017, how do you think overall pork production will compare to 2016?
When we look at production, I think given the pipelines, the supplies on the ground that are in the pipeline, we're looking at larger supplies. I think for slaughter numbers, we're looking in that 2 to 3% growth. I think that could be a little bit conservative. It could be upwards of maybe 4 to 5% when we look at production, especially when we look at weights. Weights, I think, have really leveled off here late into 2016 and early into 2017. With the larger supplies, I think that could help move those hogs through the system and maybe back off those weights, or at least keep those weights below what we've seen the last several years. But also maybe driving those, as we've continued to see from a trend line, as really 1 to 2% growth in weight. So I think we're really looking at larger supplies in 2017. A bit to be debated about how large those supplies, but I think we can really count on 2 to 3% growth here in 2017.
Analyze for me how prices have recently moved.
The start to 2017 has been great, especially when we compare that to prices in late 2016. If you look at the week ending February 10th, prices top 71.28 from a lean hog basis here in Iowa, southern Minnesota. Really, that is the highest price since the third week of July 2016, and a 75% increase from the low that we hit in mid-November at 40.75. Also really concurrently, futures prices have all gained really across the board when we look at 2017 contracts. So that has really given us a lot of optimism for better returns in 2017.
Indicative of what might be the future, what are iso-wean prices doing right now?
Well, it amazes me every year. We do see it that really the price increases we've seen from October up to January, really when we see the heights of those prices from a seasonal standpoint in January. We've seen them as low as $12.72 in the first week of October, and now we're up in that $54 range. They are really at the heights I think we're going to see for the year, because these current prices are really targeting that late summer month. As we get into the next several months, those are the hogs that are going to be priced off that October and December contract, and I think that will pressure down those iso-wean prices.
Let's close out with a look at margins for farrow-to-finish producers here.
Well, I'm looking at margins being about $10 better than we've seen in 2016. We've seen 2016 margins for farrow-to-finish production right around that break even, maybe about $1 loss. Here in 2017, I'm looking at that $9 to $10 range. The first quarter, about $12 per head profit. The second quarter, about $18. Third quarter, $15. And the fourth quarter, I think, returned to negative in that $5 to $6 loss range.